Let's get a move on and focus in on Sadbhav Engineering as well. Talk a little bit about their overall order backlog, what their results have been like, as well as the kind of EPS cuts that we've seen post their earnings and the strategic deal with CPPIB. Nitin Patel is the ED of Sadbhav Engineering, now joins in on the show. Good to have you on board. I'm just going to start off with what seems to be bothering investors. The stock down over 50% since the month of May. Can you give us some sort of a sense as to when the strategic deal with CPPIB-led InvIT is going to be complete? And, any sort of message that you would like to send out?
See, fine. First of all, I would like to mention here, this is the one of the largest deal in the Indian highways sector actually. So 9 of our operational SPV out of the 12 has been, we have entered the definitive agreements, binding agreement with InfraVid Trust led by CPPIB, L&T IDPL, Allianz and Omers actually. So the signing has been done in the first week of July. And there are the certain condition precedents basically which are customary in the nature, largely the approval of the NHAI and the concession granting authority, and apart from the lenders of the project. So we have already in a very advanced stage of getting the approval from NHAI and other state authorities. And even from the lenders perspective, all the basically the recommendation from the respective branches have moved to their headquarters. So we are expecting that by September and we should get both the approvals should be there in the place. So once these two are the main one, it is there. So remaining the normal CP, almost we have completed almost 70% of the same. So we are targeting to complete by October to closing of this entire deal actually. So that is way how we are proceeding as of now. And all the process is going on very smoothly.
Enough. Now let's talk a little bit about your numbers as well. You posted a 4% revenue CAGR over FY16 to 19. Do you think FY20 will be the fourth year of flat top line growth for the company?
See, even during our post first quarter result, we have mentioned to the market that this year we will have almost around a flat top line, and mainly because of the 3 of the hybrid annuity projects where we have already achieved the financial close. But since last 1 year, the authority has not yet completed the 80% of the land handing over, which is mandatorily required to start the appointed date of the project. So we are very clear, and even under the current context, the lenders of the project and even authority is also insisting that once we complete the 80%, then you should take the appointed date. So considering this fact and on the ground situation, we are of the view that once we get the appointed date, then we will get the execution of these 3 projects, number 1. And second thing, once this will be started in this year itself, so we will see some decent growth in FY21 based on the even current order book itself. So even any new orders which will come, that will be in addition to that actually. So that is way how we have guided to the market.
Okay, can you talk about the recent reports where the PMO suggests that NHAI will become or work like a road AMC? They will be looking at projects from a commercial feasibility point of view. What is your outlook on that? And do you think all of that will help further increase the viability of projects at the IRR level?
See, first of all, I would like to mention here that if we see the NHAI per se since last 20-25 years, because Sadbhav, we are executing with NHAI since last 25 years. And all the projects of NHAI, either it may be EPC, it may be annuity, hybrid annuity or the BOT. So normally NHAI has basically a tendency to collect the toll on all of their projects actually. So definitely what we are of the view, the authority might have calculated while floating the tenders under the EPC that what will be the viability at their end. And particularly in hybrid annuity in BOT, generally developer takes a call on the same actually. But in annuity and hybrid annuity, the risk of the toll is not there actually. So the way that it has been designed. But going forward, if the viability is also being worked out, but we are of the clear view that the BOT per se As of now, there are no basically the takers considering the current environment. But obviously hybrid annuity and as well as the annuity and some of the EPC, if it is coming, definitely the developers as well as contractor will come forward for the developing or constructing the highways.
Okay, fair enough. Now, close to 31% of the $1.5 billion order backlog was unexecuted in the first quarter. Is this likely to start execution in FY20? Could you just walk us through, some sort of a timeline there?
See, fine. As of now, out of the total order book, almost around 2,700 crores worth of the orders are yet to be executed. So as I have mentioned that once we get the appointed date of all the 3 projects basically, so this will be starting, and rest all other basically orders are under execution. And more particularly in irrigation and mining, generally we are almost irrigation, we are about to complete all the projects in this year itself. And in mining, basically the construction, the mining operation period itself is 4.5 years from now. So it will go on basically in the one steady space actually. But obviously the appointed date of the 3 of the projects will add further basically uptick in terms of the execution top line for the coming quarters to come.
Finally, your margins in the first quarter, that was a silver lining. Do you think that given the fact that you're seeing these well-priced orders, that's going to drive your margins in the future as well? What are you penciling in?
See, fine. See, in terms of the margin, if you see during last 4-5 quarters, obviously the margins are consistently improving, and more particularly when the hybrid annuity projects are getting executed, because in these projects the margin levels are little bit higher as compared to the EPC. So we are very confident that we will be able to maintain the margins little above the 12% at EBITDA level throughout the basically coming 4 to 6 quarters basically, except for the new orders which we are getting, that we have to see at what margins we are adding the orders.
We'll let you go on that note. Thank you for joining in, Mr. Patel, and giving us a roundup of how things are shaping up in terms of your overall execution, order book, the margin picture as well.